What a stock brokerage account offers. A brokerage account offers a cash savings account, which is usually referred to as a core or sweep account. You save money into this account in order to be able to buy and sell stocks. The cash savings account usually has a variable interest rate, and the current 2013 rates are between 0.07 to 0.5% depending on the firm. This account is also protected by the FDIC, which stands for the Federal Deposit Insurance Corporation. Up to $250,000 is covered for individual accounts. Up to $500,000 is covered for joint accounts. Brokerage account securities are protected by the SIPC, which stands for Securities Investor Protection Corporation, which protects each customer up to $500,000 in securities, including a limit of $250,000 on claims for cash awaiting reinvestment. Additional coverage for larger amounts of securities held in a brokerage account is provided by some firms. Understand security losses in value within their markets due to market fluctuations are not protected by SIPC insurance. This is important to remember because if there was ever a crisis like we had in 2008 and your brokerage firm was going to file for bankruptcy and you had over $500,000 in your account, then you would only be insured up to $500,000 for securities you own. Other savings choices. Other than a cash savings account, you usually have the options of a taxable money market fund or a non-taxable state municipal money market fund. First, let's go over the taxable money market fund. A savings account in a taxable money market fund means interest earned on your money is taxed by the federal and state governments. Most recent interest rates range from 0.01 to 0.22% on a taxable money market fund per a non-taxable state municipal fund avoids paying federal and most of the time state personal income taxes on interest earned. Most recent interest rates range from 0.01 to 0.03% annually. Present interest rates in 2013 are low due to U.S. lending rate is at 0%. Interest rates will adjust higher when the Federal Reserve decides to raise the U.S. lending rate as the economy improves. More advantages. A stock brokerage account offers check writing and an ATM card with typically no fees. Most importantly, a stock brokerage account offers research investment tools for you to use before and after purchasing a stock. For example, Fidelity's website offers stock reports and recommendations from a wide variety of firms' research, such as Jefferson Research, Zacks Investment Research, and others. Most brokerage firms offer 24-hour customer service to answer any question you have on your investments. Also, brokerage firms offer one or more smartphone applications or a mobile version of their website. Discount broker. As mentioned before, there are two types of brokerage accounts. Those two types include a discount broker and a full-service broker. A discount broker is essentially a do-it-yourself, cheaper brokerage account. The investor does their own research and stock purchasing, which comes with a low commission cost. Trading can be done over the internet or the phone, but over the phone tends to be more expensive. A few more benefits can be included: online bill pay, easy fund transfers, overdraft protection, and even direct deposit. Full service broker. A full service broker essentially handles your brokerage account and investing at an increased cost than a discount broker. Commissions fees are more expensive. Trades can also be done online or over the phone, just like with a discount broker. Full-service brokerage accounts typically require a large amount of money to open. The initial investment can be $50,000 or more. Annual service fees will vary from firm to firm, but could fall between 0.25 to 1.7% for eligible assets. Thank you for watching this video. Please continue to video 3.